If you're like me, when you think of life insurance, you probably picture that bald guy from Groundhog Day.
Would you be at all interested in seeing the inside of the van?
Not that guy, the other guy.
Ned! Ryerson! Do you have life insurance? Because if you do, you could always use a little more. Am I right or am I right or am I right? Right.
If that is your only impression of life insurance, then I urge you to watch until the end. Actually, this is how I figured you guys would react to a video about life insurance. Bear with me, I know it's not a sexy topic, but just like life is a part of death, life insurance is a part of finance. And because most people avoid talking about it, it's led to a pretty widespread misunderstanding of it. So if you give me 5 minutes of your time, I will teach you 5 things that you should know about life insurance. Life insurance was created way back in the 1600s and was designed to pay out a sum to your loved ones in the event that you didn't come back from battle, or you were bludgeoned by natives, or you got scurvy. I don't know, there was a lot of shit that could happen to you back then. Men were the only breadwinners at that time, and they wanted to be sure that their family was taken care of if they died. Fast forward to today, society has evolved quite a bit, and while you are far less likely to be bludgeoned to death, the chances you're gonna die eventually are all the same.
Sometimes people just die.
And like society, life insurance has evolved over the years, adding valuable features and products to meet today's updated lifestyle. So here are the 5 things that you didn't know about life insurance. Number 1, life insurance doesn't just pay out when you die. That's what it used to be, but while everyone was busy ignoring the Ned Ryersons of the world, it changed.
What are you doing for dinner?
Something else.
Today, there's a type of insurance called living benefits that allows you to get your hands on that money before you die. If you get really sick, like you have a heart attack, a stroke, or cancer, or something like that. This is obviously way better than the old kind and costs the same as the old kind, which if you're young and healthy, can be super cheap, like $20 a month cheap. These benefits guarantee that if you do get sick or injured, you'll also get a large sum of money to either help pay medical bills, pay off debts, or just live out your bucket list. You can't guarantee that you won't get cancer in your life. But for $20 a month, you can guarantee that if you do, you'll also win the lottery, so to speak. That is a fairly insensitive analogy, but it is quite literal. Number 2, if you don't get sick or die or otherwise use your policy, there are some specialized products that allow you to get all of your money back. Some people's problem with buying a short-term policy is, what if I don't get sick or die? What if I buy a 20-year term policy and at the end of those 20 years, I'm totally healthy? I'll have just wasted all that money. Well, there's insurance for those people as well. Now there are products that allow a full refund of all premiums paid at designated windows throughout the term of the policy. And some of these policies also come with living benefits. These return of premium products are going to cost you upfront about twice as much as the use it or lose it kind of policy, but you can get all that money back in the end, which is a pretty awesome new feature. You're basically just letting the insurance company borrow your money for a bit, and in exchange, if you stay healthy, they'll give you all your money back. And if you don't, they'll give you way more than you gave them. It's kind of a win-win. Number 3, life insurance can earn cash value. Now what does this mean? Basically, it can be used as a savings vehicle. There are several different life insurance products that earn cash value. And basically what this means is that you can use it to save and grow your money. Every day, people are using life insurance products as an alternative to supplement 401ks, IRAs, UTMAs, 403bs, CDs, ACDCs, NWAs, pretty much any acronym you can think of. Now, I'm not saying that any one vehicle is better than the other because each of them have their own perks, but one perk to saving your money in a cash value life insurance vehicle is that most of them have this floor cap system, meaning they'll cap your gains in an up market. They'll usually cap it around like 10%. But the coolest part is that they actually have a floor, usually around 0 to 1%, which basically ensures that you won't lose any money due to something like a crash in the stock market. They hedge your gains to give you a little bit of safety. This can be especially useful in an unsure market, kind of like during election years. And number 4, you don't pay taxes on a death benefit. This is something everyone should know, but it isn't widely known. There's a common saying in the life insurance industry that says, don't leave your family money, leave them life insurance. And there's a good reason for that. When you die, all your money and all your assets get metaphorically piled into the middle of a table. Any debts you owe are paid first. All the wealth you've accumulated is subject to tax. Don't even get me started on if you don't have a will. You can't even die without Uncle Sam's hands in your pockets. However, life insurance payouts go straight from the insurance company to the beneficiary. No middleman, no tax, no questions asked. Meaning even if you're in debt to the moon, your beneficiaries get a check. They put that in the bank, and that's the end of it. No one else can touch it. Number 5, the last thing you really should know, and we touched on this earlier, is that life insurance is much cheaper when you're young and healthy. For example, I was able to get $500,000 of coverage for about $25 a month. Now, obviously that rate is gonna vary from person to person, health to health, situation to situation, but think about it. I ride a motorcycle, and so does my wife. We have both been in near-death accidents, and the only reason I can ride now with a clear conscience is knowing that if the worst were to happen, on the bike or off, I'm not gonna stick anybody with the financial burden of my mortgage, my hospital bills, or any debts of any kind. And while that $25 a month does give my wife another reason to want to kill me, it takes away so many other worries, and to me, you really can't put a price on that. I understand the irony that the best time to spend money on things like life insurance and saving for retirement is the same time in life that you most likely don't have expendable income, when you're young. Trust me, that irony is not wasted on me. It may not seem fair, it may seem like you're constantly chasing something that's just always out of reach, but that's the way it is. And if you can delay some gratification now and pay for these things now as opposed to when you're much older and less healthy, it could save you, without exaggeration, thousands, tens, or even hundreds of thousands of dollars in the long run. So 5 things you now know about life insurance. It doesn't just pay out when you die. You can get a full refund, so to speak, in some situations. You can use it to save and grow your money. It is not taxable, and it is far cheaper the younger and healthier you are. Thank you all so much for sticking around to the end. You are truly, truly beautiful. Hit that like button if you learned something, and I will see you right here next week with another tip.